We're now going to be talking about financial planners as advisors for businesses. That may surprise some of you that you're going to be advising businesses because you only advised individuals in the past. But if that individual you advised in their personal life wants to start a business, you can be very effective by giving them advice in the areas of their business. In fact, you could become an effective business manager. If we look at what a CPA does with a business and what you can do with a business, the activities are very similar. Again, assuming the CPA firm isn't doing the taxes, they're just giving management advice, you are probably in many respects more qualified to give advice because not only do you cover the same topics that they would, but you also have financial plan history, and CPAs don't do financial plan histories, so you can basically prepare plans for your client. And the financial plan is like a business plan. Both are very similar. And in fact, the template I use for one works in many respects for 75% of the other. So that it's something you can make use of, and it expands your business space by being able to do business management with clients. We're going to talk about financial planners serving as on advisory councils or being board members of a board of directors. So let's get started. It is not uncommon for a company to ask their financial planner to act on their board or advisory council. This has happened to me several times. As a financial planner, it's also happened to me as a tax advisor. Companies need assistance from people who have experience outside of their company, and that is certainly something that happens when we hire a financial planner. You have a lot of experience outside that particular individual and their business, just because of the businesses you've been doing with people over the years. And if you've done business as a financial planner for businesses too, that's even better. Now, in both cases, if you work on a board of directors, which again applies only to corporations, or an advisory council, which applies to any type of business entity, you owe fiduciary duty to the company. And the first duty is duty of loyalty to the business and to the owners, which I think should be obvious. A company interest comes above your personal interest. And finally, there has to be an unbiased judgment. Those are all three that people, I think, comes intuitive. But again, I like to see the things in writing, and that includes what I'm talking about, being on a board of directors or advisory council. Specifically, what are we going to do? Because every company is a little bit different, especially small companies. I've had small companies wanting board of directors to be deeply involved in the day in and day out running of the company. I've had others who want only to be looking at the future, look at the strategic nature of the company. And I have some that I worked with over the years who wanted us to do strategic and tactical. So it really depends on the company what your role will be. And of course, the bigger the role you have, the better for you from an economic standpoint. Something to be aware of is what I call the SOX Act of 2002. It increases the responsibility of board members and advisors as it holds management accountable for what is being reported. Now, this is rippled through the business world. It's very unpopular because small companies are spending a lot of money doing a lot of documentation that, quite honestly, most people agree really shouldn't be necessary for small companies. But again, when the government makes laws, they don't necessarily think about what they're doing. And the regulators love to regulate, let's face it. Because if they don't regulate, they're not going to have a job. So it's sort of job protection for them to, what I call, over-regulate, especially in the areas of small businesses, because big businesses can fight back. Small business cannot fight the government. Can't fight City Hall is the way I put it. Although only applicable for public corporations, it's advisable for all companies to comply with it. And the reason is it has been found that banks don't want to lend to you, and investors don't want to lend unless you're meeting the requirements of the SOX Act. Second, makes compliance easier if and when the company goes public. And you can't go public unless you are full compliance with SOX, and it's not something you're going to do overnight. And third, it shows professionalism. And one of the things I think that especially financial planning organizations that have grown quite large want to be shown as very professional. And they might even think about it, not only for your clients, but also for your practice of starting to think about compliance. Now, it isn't cheap, and you're going to need assistance. Where I say it's the CPA's lifetime guarantee of employment. We know that the government is looking at cutting back on this area, but at the present time, we're still subject to the full SOX Act. And again, even if you're not subject to it, because you're not a public corporation, there's some big advantages of doing it, especially for lending purposes, and borrowing from other parties becomes very important. What do boards and advisory councils do? That's a question I get asked from students all the time. In fact, I've been asked by companies starting off. They say, okay, I'm a corporation, and my state requires me to have a board of directors. What did the boards do? And I always kind of laugh when they say that, because I say, you're running a business and you don't know what your board of directors does? Well, corporations have board of directors who are responsible for long-term goals, setting policies, verifying compliance to the business plan, hiring and compensating executives of the company. And let's face it, in a small company, you are going to probably be doing a lot more than that for the owner. Typically, the owner has a lawyer and a CPA, an insurance agent, and a banker on the board to give him, in effect, good advice that he doesn't have to pay an arm and leg for. Typically, you're paid for attending board meetings, or you're paid an annual fee for being on a board, but it's not the same rate you'd get per hour as being a professional. So where you may get $550 or $600 for attending a 2-hour meeting, and your normal rate is that much for an hour, this is done by professionals. One is to help the company out and help the company grow, and two, it establishes you as an expert in the field. And I mentioned earlier, any type of business entity can have an advisory council who advises the owner and management. Shouldn't be anything surprising. And it covers policies, business plans, long-term planning. Generally, they are the company lawyers, tax advisors, bankers, etc., just like they're on the board. Now, I think even if you are a corporation, you have a board, you should also have an advisory council, but have different people on it to act as an outsiders look at it. I might note that many times you'll have on the board people who are competitors of yours, and because they are experts in their field. So if you have, say, I'm in Thousand Oaks, California, where Cal Lutheran is located, and I have a restaurant, and there's a very successful local restaurant here, I might ask the manager of that restaurant or the owner of that restaurant to serve on my board, even though I have a restaurant. They have a fiduciary duty to me on my board, which they have to separate from the fiduciary duty to their company. And that's always that fiduciary duty comes in. And that's where people get in trouble. And that's why I also encourage boards of directors and advisory council members to have board of director liability insurance, which is a big help, because too often you're defending something that you know you did the right thing, but you've got to explain it to third parties, and you got to explain it to judges. And that insurance is a big help for you. I think I've never had a board, I never had a company deny me the right to have that insurance if I'm working for them. It's not that expensive compared to what they would pay if they had to go outside and hire a full-time advisor to do it, or even a part-time advisor to do the activities. And with that, we're going to end it.